National income can be measured by three ways. One, product method or inventory method. Two, income method or factor earning method. Three, expenditure method or outlay method. And if these methods are done correctly, the following equation must be true. Output will be equal to income is equal to expenditure. What do you mean by that? Whether you use the output method or the income method or the expenditure method, the national income should be the same. However you calculate, the output must be equal to income, which will be equal to expenditure. We have already seen the first method, the product method. Let's see the income method. What do you mean by income method? Income method is calculating the national income from the distribution side. Distribution means we need the factors of production to do or to create goods and services. So when they render something to us, we have to give them factor incomes. So under this method, national income is calculated by adding up all the incomes generated in the course of producing national product. So what all incomes distributed to the factors of production must be calculated, and by this way you can calculate the income method. National income is calculated as a domestic factor income. What all factors of production that are used? Land, labor, capital, organization, plus the net factor income from abroad. So the equation is Y is equal to W plus R plus I plus pi plus R minus M. The W stands for wages, R rent, I interest, pi is the profit for the entrepreneur, R is export and P is import. Usually we use X minus M, but here it is given as R minus P. Both are the same. Export minus import. What do you mean by wages? The factor of production, land, labor, capital, and organization are given factor incomes. So these are the incomes given to the factors of production. Wages is given to the laborers, rent is given for the land, I is given for the capital, pi is the profit for the entrepreneur. So this is called as national income is calculated as domestic factor income plus the net factor income from abroad, R minus P. Now we have certain precautions that we should take while calculating the national income. So I've given here two heads. Can you follow? Not to be included, that is the items which should not be added, and the items to be included. So first let us see the items not to be included. Under that you have transfer payments, the receipts from the sale of second-hand goods, windfall gains, corporate profit tax. To be included, rent for self-occupied houses or offices, services provided by owners. So let us see what are transfer of payments. So what do you mean by transfer payments? A transfer payment. A transfer payment is a redistribution of income and wealth by means of the government making a payment without goods or services being received in return. For example, pension. You just imagine pension. Um, when a government servant retires from service, even after retiring from service, every month the government gives him a pension. When he works, he is rendering some service and he is getting a reward. But after his retirement, after 58, even if he retires, the government gives him pension. Here, the retired person does not contribute anything to the society. He does not give a good or a service, but he is given a transfer payment in terms of pension. So this is only called as a transfer payment. So a transfer payment is a payment made or the income received by an individual for which there is no goods and services exchange. So these transfer of payments should not be included in the national income. Second one, the receipts for the sale of second-hand goods. Already we have seen this several times. What do you mean by that? Initially itself, the product has got a value. When you sell it again, when there is a second-hand sale, Again, an income is generated. This income must not be included in the national income. Only once it can be counted. Third one, windfall gains. Did you understand the receipts from the sale of secondhand goods? The receipts from the sale of secondhand goods should not be treated as a part of national income, as they do not create new flow of goods or services in the current year. It is a good which has already been produced and they sell it again. So that's why it is called as a second hand good. Second hand good. Next one is windfall gain. What do you mean by windfall gain? Unexpected gain in the income is only called as windfall gain. Suppose a ordinary person goes to a shop and buys a lottery ticket for 5 rupees. He buys a lottery ticket for 5 rupees, and when the results are announced, he's been announced as a winner, and he gets 1 crore. This is only called as windfall gain, an unexpected gain in the income, which could be due to a winning of a lottery. So this amount cannot be calculated in the national income. Last one is corporate profit tax. What do you mean by corporate profit tax? It is a form of tax levied by the government on profits earned by the businessmen in a particular period of time. So suppose if a businessman gains a lot of profit, he has to give a certain part of money to the government. This is paid in the form of tax. This is only called as corporate profit tax. So corporate profit tax should not be separately included, as it has been already included as a part of the company's profit. So it cannot be carried over again. So these are the items which are not to be included in the national income. Next one, items to be included. What are the items to be included? First one, rent for self-occupied houses or offices. Can you recollect this term, self-occupied houses or offices? Rent for self-owned products. They are called as imputed cost. Imputed cost. Suppose an entrepreneur has got his own factory and he is the entrepreneur. So he doesn't take anything as salary for him or anything as rent for him, because it is his own factors of production. So what do they say? These items must be included. In case he hires some other space, some other area for his office, he has to pay a rent. In case he employs someone as an manager for his business, he has to give an income. So when we serve in our own factories or use the same building which we own, we have to pay rent, which has to be included in the national income. So rent for self-occupied houses or offices or services provided by the owners can be added to the national income.